Dan, the Facebook numbers were pretty impressive, and I think probably the most impressive part was that the advertisers are not leaving Facebook. They're actually like doubling down on this.
That's really the headline. I mean, if you look, the advertising and monetization kingdom, continues to really be there. And if you look at user growth, average revenue per user, I mean, those are really the focuses of the street. And especially with all the antitrust issues, it just shows they're continuing on the offensive. And I think that's really what you're going to see in the stock in terms of driving this higher.
I will admit that I did a little bit of a double take. It was kind of like it smacks you across the face. Like, wait a second, the FTC has launched another investigation. I thought I was reading old headlines or something at first, because the idea that you can announce a settlement one day and then announce, oh, by the way, there's another FTC investigation. Forget about the DOJ or anything else that's going on. That seems like a kind of high wall to try and climb with some of these issues.
Yeah, right now it almost feels like there's a line in the beltway in terms of, who's really focused on FANG, right? You got DOJ, FTC, and others, and even on the Hill. And I think
especially Facebook. I think they're the ones who are primarily the target for much of this.
Yeah, they really have the bullseye on their back. And I think right now, in terms of what's going to happen over the coming, year or two, you're going to see more focus around privacy, monetization, and the antitrust issues, especially with WhatsApp and Instagram. And that's why right now they're trying to play nice in the sandbox. You saw that in the conference call in terms of Zuckerberg and everything they're trying to do. But that's why right now they need the balance. Because from an investor perspective, it's monetization, it's profitability. But also in terms of the Beltway in Brussels.
You don't want to be too profitable because of Washington?
Well, I think it's not necessarily the profitability, but in terms of regulatory, the oversight.
What happens, the line between monetization and privacy.
But the question I have is, do you think this turns out to be a privacy story via the FTC, meaning if there are fines and other things, there's just more of that? Or do you really think this turns into an antitrust case?
Well, I think
that's a very different, that's a structural issue.
Yeah, I think the broader worry is around antitrust. Because when you start to look at these models, especially Facebook, between WhatsApp and Instagram, what they're doing on social media, them and Amazon, I think there's a brighter spotlight on antitrust. And I can tell you from an investor perspective, the privacy continues to be there, no doubt. But I think a lot of that with Cambridge, we've seen the fines more in the rearview mirror. I think the broader issue here is around antitrust.
What can you point to within the world of antitrust when it comes to Facebook where you think that they have put other competitors at a disadvantage?
Yeah, and that's why on social media, if you look from an overall user perspective, let's call it almost 3 billion in terms of users, I think right now it's going to be tough, in terms of our opinion, for DOJ to prove pure antitrust, which is why we believe right now it's more of a finer business model tweak. But nonetheless, they are going to peel away the onion here. And I think for investors, they want to continue to see strong fundamentals on user growth and active sort of engagement. That's what you saw. That's why right now, in terms of the stock, that continues to be more background noise in terms of a risk profile.
Very quickly, you buy the stock here?
Yeah, I think you continue to own this name, and I think fundamentally what you saw last night gives it another feather in the cap for the bulls.
Okay. Let's talk about Tesla, because Tesla did have deliveries that were strong as anticipated, more than 77,000 for the Model 3, but the margins were not strong. They shrunk to 18%, and they lost a considerable amount of money. Stock is off by 11% today. What do you think of this?
I think this was a major gut punch for the bulls, because I think when you look, everyone knew the delivery number, a rebound in 2Q, but they fundamentally can't make a profit even on record deliveries. And the gross margins is the key. That's the line in the sand. That needed to be above 20%. It came in below. And I think this really calls into fundamentally questions. Can they have a profitable business model with Model 3?
Model 3 being average selling price of $50,000. You think part of it is, at least at this point, they still need more luxury sales of the car. Do you think the Model 3 is cannibalizing some of the luxury sales?
Yeah, we do believe there's about 10 to 15% cannibalization. I think S and X, that continues to be the issue, as that drops off a cliff. Right now, it's around Model 3. They pushed out profitability. They kept to their delivery guidance, which we continue to think is going to be extremely challenging for them to hit. And that's the problem for Tesla right now, is that even though deliveries came through, given that gross margin profile, the whole profitability profile of this company going forward, it is called into question after last night.
The company would say that when they open their Shanghai factory at the end of the year, that many of these issues will be resolved. They'll be able to have local deliveries for some of those. Do you buy that?
Well, I think that's something on paper that makes sense, but we know in terms of China, a lot of regulatory issues, a lot of delays that could happen with Giga 3, and that continues to, I think, be a worry sort of balancing act for Tesla as they build out Giga 3.
So you still think the stock price is worth $230?
Well, I think this is something that could go lower, and we're lowering our price target to 220 because, in my opinion, the profitability profile being pushed out. And fundamentally, you look what's happened on deliveries.
But tell me how you get to 220. Just do the math on 220 for us.
220 is what long-term profitability could be in a multiple on that, call it a 15 times multiple in terms of where they could eventually be on a profitability profile. That's why right now, this is going to be a glass half empty view of Tesla until they prove otherwise. And I view last night as ultimately a step back for the bulls, just given what you saw on profitability and just given the overall profile. And also fundamentally, unit guidance of 360 to 400 is very aggressive. They should have ripped the Band-Aid off, in our opinion. I think right now 340 to 350 is more the line in the sand.
Wait, ripped the Band-Aid off and said, okay, this is the top line for production. Just if you're going to get the bad news out there, get it all out at one time?
And that's what I would have liked them to see, because I think if you look at whisper numbers, 340 to 350K is really, I think, where they ultimately be. By having a 360 to 400, the business model is built on that type of demand. If you don't see the demand, then ultimately pushed out 4Q profitability, that doesn't happen.
If you
and then it becomes
if you do see those numbers, will they then be vindicated?
Well, I think if they hit the 360 to 400K, that would be a huge prove me from Musk and Tesla. Mm-hmm. And that would be a one check of the box that they need to do. If not, then you have major issues and questions of the business model going into next year.